You know, I've watched fortunes made and lost more times than I care to count. I've seen brilliant men reduced to nothing because they couldn't see what was right in front of them. And I've seen simple men become wealthy beyond imagination because they understood one fundamental truth that most traders spend their entire lives ignoring. The market doesn't care about your opinion. It doesn't care about your analysis on the 5-minute chart. It doesn't care about that perfect setup you found on the hourly time frame. The market moves in waves, in rhythms that are older and more powerful than any individual trader's desires. And if you want to survive in this game, if you want to actually make money instead of just churning your account into dust, you need to understand that higher time frames always win. Before we dive deeper, I want to let you know about something I've created for serious traders. Check out our new ebook, Thinking Like Jesse Livermore, Mastering the Market with Discipline, Patience, and Risk. You'll find the link in the description below. This book goes deep into the principles I've lived by, the lessons that cost me fortunes to learn, and the strategies that ultimately made me successful. It's everything I wish someone had told me when I was starting out. Now, let's get into why higher time frames are the foundation of everything. Let me tell you something about human nature. We're impatient creatures. We want everything now. We want to be right now. We want to make money now. I've been there. I know that feeling in your chest when you see a setup forming and your fingers are itching to pull the trigger. I know what it's like to stare at a screen for hours, watching every tick, every candle, convinced that if you just focus hard enough, if you just analyze deeply enough, you'll crack the code. But that's not how markets work. That's not how wealth is built. That's how accounts are blown. When I started trading, I made every mistake you can imagine. I chased price. I overtrade. I convinced myself that I could outsmart the market with clever entries and quick exits. I thought the secret was in finding more setups, taking more trades, being more active. And you know what happened? I lost everything, multiple times. Because I was fighting against the current instead of swimming with it. I was looking at the ripples on the surface while ignoring the tide beneath. The market operates on multiple time frames simultaneously, and this is where most traders get lost. They see a beautiful bullish pattern on the 15-minute chart and they buy, feeling confident, feeling smart. Meanwhile, the daily chart is screaming a downtrend. The weekly chart shows a major resistance level right above current price, but they don't see it because they're not looking. They're so focused on the trees that they miss the forest. And then they wonder why their trades keep failing, why they keep getting stopped out, why the market seems to move against them the moment they enter. Here's what I learned the hard way. The higher time frame is always telling you the truth. Always. The lower time frames are noise. They're distractions. They're the market's way of separating the disciplined from the desperate. When the daily chart says down, it doesn't matter what kind of bullish pattern you found on the 5-minute chart. You're going to lose. Maybe not immediately. Maybe you'll get a little bounce that makes you feel smart for a few hours. But eventually, the higher time frame wins. It always wins. Think about it this way. Imagine you're standing on a beach watching the waves, the small ripples moving up and down the sand. That's your 1-minute chart, your 5-minute chart. They move fast. They change direction constantly. They seem important when you're focused on them. But then there's the tide. The tide doesn't care about the ripples. The tide is going to come in or go out based on forces much larger than any individual wave. And if you're trying to build a sandcastle based on watching the ripples while ignoring that the tide is coming in, well, you're going to lose your sandcastle. Every single time. The psychological challenge here is immense, because lower time frames give you the illusion of control. They give you more setups, more opportunities, more action. And action feels good. Action feels productive. Sitting there waiting for the weekly chart to give you a signal, that feels boring. That feels like you're missing out. Every bone in your body is screaming at you to do something, to take a trade, to be in the market. But that's your ego talking. That's your impatience talking. That's not wisdom. I remember one trade that changed everything for me. I had identified a major trend on the monthly chart. It was clear as day. The market was going up, and it had been building this move for months. But I got impatient. I saw what I thought was a good entry on the hourly chart, and I took it. Small position, I told myself. Just to get started. The market immediately moved against me. I held on, convinced I was right. The daily chart started turning against me, but I ignored it because my monthly thesis was solid. I lost that trade, not because my monthly analysis was wrong, but because I didn't wait for the daily and weekly time frames to align with it. I jumped in based on the noise instead of waiting for the signal. That's when it clicked for me. The higher time frame sets the direction. The intermediate time frames give you the rhythm. And the lower time frames, if you use them at all, are just for fine-tuning your entry. But you never, ever trade against the higher time frame. It's suicide. The big money,